If you think a 37% top income tax bracket is the worst financial hit you can take from the federal government, you are completely wrong. Right now, a staggering number of the 32 million small businesses in America are being quietly hit with a devastating $500 per day fine, and nearly 90% of business owners have absolutely no idea it is happening to them. We are no longer in a grace period. It is 2026. The federal deadlines have entirely passed, and the Department of Treasury is actively enforcing a massive new law that could cost you $10,000 and up to 2 years in federal prison, even if your tax liability is exactly 0%. If you own an LLC, an S-Corp, or any small business, you need to stop what you are doing and pay close attention because your personal bank account is officially on the line. Welcome to ClearPath Tax, where we make complicated tax laws completely clear. What we are talking about today is the Corporate Transparency Act and the mandatory BOI report, which stands for Beneficial Ownership Information. This is a massive federal dragnet run by FinCEN, a bureau of the US Treasury. For decades, you could open an LLC and keep the true owners completely anonymous. The government was blind to who actually controlled these companies, making it easy for bad actors to hide money. To stop this, the government changed the rules. Now, if you own 25% or more of a company, you are required by federal law to upload your highly sensitive personal information, including your home address and a picture of your driver's license or passport, directly into a government database. The biggest tragedy right now is that millions of people are still operating under outdated information from last year. Let us look at the brutal reality of the 2026 deadlines. If you formed your company before 2024, your absolute final deadline to file this report was January 1st, 2025. If you are watching this right now and you never filed that paperwork, you are over a year late. That means your $500 daily fines have already maxed out at the $10,000 limit, and you are currently sitting in the danger zone for federal prosecution. The government is not sending polite reminder letters. They are simply letting the penalties accumulate. But here is the massive trap for anyone opening a new business right now. If you are starting a brand new LLC or corporation in 2026, the government is no longer giving you a 90-day grace period like they did in the past. As of today, you have exactly 30 days from the moment your state approves your business entity to file your personal information with FinCEN. If you miss that strict 30-day window by even 24 hours, the system flags you, and that $500 daily penalty starts ticking immediately. A simple oversight during your first month of business could bankrupt you before you even make your first sale. What makes this penalty so terrifying is how it is structured. This is not a fine against your business entity. If your LLC gets fined $10,000, you cannot just declare bankruptcy on the business and walk away. The Corporate Transparency Act specifically allows the federal government to pierce the corporate veil. This means the fine is attached to you personally. The Treasury Department can and will come after your personal checking accounts, your savings, and your personal assets to collect this debt, rendering the liability protection of your LLC completely useless in this situation. The nightmare does not stop with ownership percentages. There is a second, far more dangerous clause in this law called substantial control. Even if you own absolutely 0% of a business, if you make major decisions for the company, you are legally required to be reported. This applies to C-suite executives, presidents, and even general managers who have the authority to sign major contracts or hire and fire staff. If you have a trusted employee running your operations and you fail to include them on your FinCEN report because they are not technically an owner, the federal government considers your report incomplete. An incomplete report triggers the exact same $500 daily fine as a missing report. Another trap that is currently catching thousands of people off guard in 2026 is the ongoing update requirement. The BOI report is not a one-and-done piece of paper that you file and forget about. Whenever any of your reported personal or business information changes, you are legally obligated to log back into the FinCEN database and update your file within exactly 30 days. If you move to a new apartment, you have 30 days to update your address. If your driver's license expires and you get a new one, you have 30 days to upload an image of the new ID. If you fail to make these updates within that strict window, you fall completely out of compliance and the daily fines start all over again. Many business owners are desperately looking for a loophole or an exemption, but the reality is that the 23 specific exemptions written into the law were intentionally designed to exclude the average entrepreneur. Banks, credit unions, insurance companies, and publicly traded entities are exempt because they already face heavy federal regulations. For the everyday real estate investor, e-commerce seller, or freelance consultant operating out of a single LLC, those exemptions offer absolutely no protection. You are required to file. The only exemption that might save a successful small business is the large operating company exemption, but the criteria are incredibly strict. To qualify, your business must meet 3 rules simultaneously. You must directly employ more than 20 full-time employees in the United States. You must operate out of a physical commercial office space, and your previous year's tax return must show over $5 million in gross receipts. If you have 19 employees, or if you make $4 million, you do not qualify and you must file the report. Thousands of people are also getting penalized right now for old LLCs they opened years ago and forgot to close. FinCEN does have an exemption for inactive entities, but the rules are virtually impossible to meet for most people. To be considered exempt as an inactive entity, the company must have been created before January 1st, 2020. It cannot hold any assets whatsoever, including bank accounts or domain names. And it cannot have sent or received more than $1,000 in the past 12 months. If you open an LLC in 2021 just to hold a piece of real estate or test a business idea, it is not exempt, and ignoring it will trigger the massive fines. Foreign entrepreneurs who registered US-based LLCs to access American markets are facing even heavier scrutiny. If you do not live in the US but you formed a company in Delaware or Wyoming, you are absolutely required to file this report. Since you likely do not have a US driver's license, you must upload a clear image of your valid foreign passport. The government is aggressively cracking down on foreign-owned shell companies this year, and failing to comply will instantly red flag your business, potentially freezing your US merchant accounts and banking access, while the fines pile up. If you are a serial entrepreneur or a real estate investor with 5, 10, or 20 different LLCs, manually updating your personal information across every single company every time your ID expires is a logistical nightmare. To avoid making a costly mistake, you need to use a free tool called a FinCEN identifier. By applying for a unique 12-digit FinCEN ID, you only have to upload your personal information into the system once. You then plug that ID number into all of your different company reports. If you ever move or get a new passport, you only update your FinCEN ID profile, and the system automatically updates all of your associated companies, keeping you perfectly safe from penalties. The most critical thing you need to know right now is that filing this form is 100% free on the official FinCEN website. Do not fall victim to the massive wave of scam emails charging $300 to $500 to do this for you. You can easily do it yourself in 15 minutes. I have linked the official secure government website in the description below. If you want me to record a step-by-step video showing you exactly what buttons to click to file this safely, drop the word yes in the comments. Secure your business today. Subscribe to the channel so you do not miss our upcoming warnings about the 2026 tax changes, and I will see you in the next video. Before you panic, take a breath and focus on what you can control right now. The good news is that if you have not filed yet, you can still take immediate action to come back into compliance. Go directly to the official FinCEN website, complete your BOI report, and make sure every required individual is properly listed with accurate, up-to-date information. The system itself is straightforward, but the details matter. A single missing owner, an outdated address, or an expired ID can still leave your report incomplete. Fixing the issue today is always better than letting the penalties and risk continue to build in the background. You should also treat this as a permanent part of running your business, not a one-time task. Set reminders for yourself every time you renew identification, change addresses, or adjust ownership structures. If you bring on new partners, promote key employees into decision-making roles, or restructure your company, revisit your BOI report immediately. This law is designed to be continuously enforced, and the business owners who stay organized and proactive are the ones who avoid unnecessary stress, fines, and legal exposure. At the end of the day, this is about protecting yourself as much as it is about compliance. The rules may feel aggressive, but ignoring them is far more expensive than dealing with them head-on. Take the time today to double-check your status, file if you have not already, and build a simple system to stay compliant moving forward. A few minutes of attention now can save you thousands of dollars, countless headaches, and potentially your entire business down the road.